Good morning, traders. MR Strategies on the 21st of March, and I want to emphasize and show pretty much what I've been talking about in terms of really understanding extreme trading when it gets pushed to those ends. And this is just another classic example of it. We got this massive run up, which was way overdue, obviously. And it really started yesterday when the markets opened up above the two. It gave you a little pullback down and it bounced so hard off the 200 that it just took off. And the rest of the day was up and running. And looks like a little enthusiasm adding it on today with this 2 day FOMC. And it seems to be par for the course. So here you get an opening coming up to this upper MA, and this is already almost a 200-point run up off of these lows at 38.40. So ideally, the markets are going to try to cough it back up. And this is about as good as it gets in terms of understanding it. You open up above R1, the first support level, and from a settlement of, I believe, 39.90, give or take. And you can see that they held above it as well as the Dow did. And it was holding this level up until 9 o'clock, and they gave you this last hard push as if they are going to take off, and they're already been taken off, and they're all the way up here. This was a classic run up. They push it, they get it all, everybody up on board, thinking this thing is going to explode, and it's exactly the opposite. It's a short reversal. I was a little more aggressive. Even if you took a more confirmed location, anywhere between 26 and 27 would have been your short entry, and the rest was just waiting it out. This is easy 6, 7 handles, and if you're trading just one contract, 5, 6 were easily done on this one. If you're trading multiple contracts just like me, you're going to play it out a little bit and you're going to start maneuvering your stops, which is what I do. I'll take my 4 or 5 handle short loss stop up here and I'll bring it underneath my short position. And then you can just see, and here is a classic hard profit taking, and I see this so often. And when I trade, and I talk about it with many of the people I work with, that whenever the market makes a hard move up or down where you simply can't get in, then you don't want to get in. And one of my number one rules in trading is never chase price. And you can see how they ran them up. They took some profits off of this R1, try to get you back on board, and then another short popped up for those who wanted to get back in. 22 would have been the short, 3 handle stop, and you can see this trend line that I posted has held. I mean, we haven't even threatened it yet, and that would have given you another 5 handles. And ideally, this thing should probably come down and finish filling the gap at some point. And you can see right here it's starting to break. But for those of you and myself who are trading multiple contracts, you have multiple exit points and you're done for the day. Whether or not you want to let this roll out and play a last few or whatever you have down to 91, 92, wherever we settled, that's fine. But this has been broken right here. Now you want to sit on your hands. But this is just taking advantage of a gap higher. Even if you wanted to trade options, and you see something like this and you're trading the SPX up here around 403, you could take a crap and you can take a crack and buy the 395 puts, and sit on that as well. So, there's multiple ways of trading the extreme ranges and the volatility and take advantage of the swings. So I would probably wait to see. You can see, I'll let us see if the Dow makes another push back down to 32, 640. We get back down to there and we start the challenge. We'll probably finish the gap fill which I believe is somewhere around 94 actually. So 94, 93. So maybe even, no, I take it back. I think it's in the 80s. In fact, I believe that's the overnight low. We'd even take that low out. So it's possible we'll go there at some point. So pay attention, and if you took advantage of this higher opening, you're done for the day. It's as simple as that. You don't have to sit and watch this stuff all day long. All right, this is the action today, and I hope you guys are taking advantage of these opportunities, man. There's a lot of great opportunities in these high volatile markets. Take care.